Assalamualaikum warahmatullahi wabarakatuh. I'm Raisya Titania as the representative of Group 8 and the other members are going to present our English assignment. The topic is the beneficial of digital banking on this era. The first explanation is going to be explained by Widya Sari. Next slide.
Digital banking. Digital banking is a bank that combines conventional banking with the internet. It provides regular banking service, but on a website or a mobile app. Digital banking is part of the broader context for the move to online banking, where banking services are delivered over the internet. The shift from conventional banking to digital banking has been gradual and remains ongoing, and is constituted by differing degrees of banking service digitization. Digital banking involves high levels of process automation and web-based service and may include APIs, enabling cross-institutional service composition to deliver banking products and provide transactions. It provides the ability for users to access financial data through desktop, mobile, and ATM service.
History of digital banking. In 1983, the Bank of Scotland offers Nottingham Building Society or NBS customers the first internet banking service in the UK. They call it Homelink. Homelink connecting via a television set and a telephone to send transfers and pay bills. The service formed the basis for online banking as we know it today. In 1994, on January, online banking is built into Microsoft Money personal finance software. 100,000 households began accessing bank account online. The Stanford Credit Union creates the first online banking website. In 2001, on December, 8 US banks have at least 1 million online users each. 19 million US households are accessing bank account online. In 2005, as banking moves online, rules must shift with the times. FIEC announced rules and regulations for financial institutions. FIS to carry out risk-based assessment, evaluate customer awareness programs, and implement security measures to authenticate remote account access. Direct bank, which mean banks that operate without a physical branch, begin to offer their service primarily online. There are ING Direct, PC Financial from Canada, First Direct from UK, HSBC Direct, and E-Trade Bank from US. In 2007, Apple launched the iPhone and a shift from banking via personal computer to banking via smartphone begins. They call it Pocket Power. In 2009, 54 million US households accessing bank account online. Bank branches are consolidating. Ratio of the US population to bank branches shift from 9,340 in 1970 to 3,684 in 2009. Branches are increasingly less important to consumers and banking moves to kiosks and online solutions. In 2009 until 2011, Genworth data indicates that over one-third of consumers felt some level of financial vulnerability. Consumers want help reducing debt and increasing savings. In a survey of 3,000 consumers, 40% said they would benefit from personal finance management tools. There are more info about changing customer demographic and expectations with the rise of Gen Y. First, 70 million people in the US between age of 15 to 32, they prefer debit card for online banking. Second, privacy is not concerned. Third, consume info in a snack size and expect instant information or gratification. Plus, rapidly shifting to mobile banking. 72 million US adults use mobile banking in 2011. In 2011, online banking goes mainstream. Even late adopters choose to bank online, and according to the American Bankers Association or ABA, the majority of Americans aged 55 plus prefer online banking over visiting a branch or ATM. In 2012 until now, we're entering an era of social banking. There will be a convergence of online banking, PFM, social networking, payments, rewards, mobile, and gaming. PFM will no longer be just a tool, but an experience and a platform for insight and innovation woven into all digital experience.
So guys, basically this presentation is talking about the beneficial of digital banking in this era. And on this part of the topic, I'll tell you guys the crucial things that you guys have to know. First, the beneficial of digital banking in this era is no more waiting. Digital banks are available like 24 hours per day, 7 days a week, and 365 days a year. That means that we don't have to go to the branch bank and make a queue to make a transaction because we have mobile banking that makes us easy. And then second, more product information. Users can more easily find information about payment methods, transaction amounts, and useful information such as financial education, topics, and types of interest. All of these help customers feel closer to the bank and better attended to. Third, increase user confidence. Electronic banking has the tools, protocols, and levels of the security that make search and transactions safe and secure. These protocols range from security certificates to strengthened data encryption. And then fourth, increase transparency in services. The cost of services has improved with even some commissions at zero cost or free transfers according to the needs of users. And then fifth, transactions are made completely secure through the use of complex encryption methods with coordinates, tokens, and electronic IDs to stop hackers. And then sixth, access to transactions. Users have access at all the time to their balances, pending transactions, and other notifications depending on this available technology. And then high levels of user satisfaction despite not being widely used. According to a customer satisfaction report by ASFI, that is the Spanish Financial Supervision Authority, more than 80% of users rate these tools higher than 8 out of 10, meaning that users find them very useful. And then last, ability to personalize interfaces, make it easy to configure designs with personalized means for accessing preferred functions.
Negative impact. First, security risk from the technology use. Maybe someone will abuse and steal user data. Second, there are jobs which may be replaced by technology, for example, bank tellers. And the last one is use non-cash payment instruments is likely to have implication for monetary policy. So the central bank must consider policies. This will be simplify the supervisory process so that there is no negative impact.
Okay, so guys, the point is over time, technological sophistication will always develop indefinitely. The example of this statement is like digital banking that makes everything easier. We are be able to access from some facility of the bank anytime and anywhere. Maybe someday there's gonna be another simplicity that we can take advantage of. Well, I think that's all that me and the team can tell. I hope you guys can take the lesson from this presentation. Thank you for your attention and wassalamualaikum warahmatullahi wabarakatuh.